Welcome everyone. Welcome everyone to a prime time edition of Winning Wednesdays. We are live on three platforms today. We are live on StreamYard, we are live on YouTube, and we are live on X. So we welcome everyone across the three platforms. Usually we go live Wednesdays noon Eastern, but today we will have a primetime edition of Winning Wednesdays. So we welcome everyone. Who do we have here? Peace, Andrea. Andrea checking in from Metro Detroit. Welcome, Andrea. Who else do we have? Let's see. So as you join in, let us know where you're from. I'm going to give it a minute before I jump in. A lot to discuss today. Busy day in the market. We're going to take a look at the S&P. We're going to take a look at the NASDAQ. We're going to talk about some headlines, some articles I have on deck that I wanted to share. But before we do so, let's take a look at, this is Google. Let me share my screen right here. This is a live look. I really just went to Google and searched stock market news. Okay, I literally just went to Google and searched stock market news to get a summary of what's going on in the market. These are some of the headlines here. First one says Yahoo Finance stock market today, S&P, NASDAQ slip as Federal Reserve ushers in first rate cut. We're going to talk about that shortly. What else do we have here? Dow Jones, CNBC says Dow Jones closes up 250 points. S&P inches lower after Fed delivers widely expected rate cut. Let's see. Let's go to more news here. All right, Bloomberg's got an article. I'm going to search Bloomberg. CNN from 2 days ago. Why are stocks setting records when the economy feels down in the dumps? Maybe take a look at that one. Let's see what else here. Okay, earlier today, Wednesday's biggest stock market stories. Molly Fool, yesterday's stock market just did something never done before. Here's Warren Buffett's dire warning. We're going to see, maybe we'll take a look at what Buffett's got going on. This is an article from this morning. Fed decision to big tech's UK investments, another TikTok extension, and more morning squawk. All right. So we're going to get into some of these articles very shortly. Who else do we have? Anyone now just joining? Today we're going in prime time. We have a prime time edition of Winning Wednesdays. Usually we are live Wednesdays at noon. We welcome everyone just now joining. I wanted to mix it up today. Let me stop sharing my screen here. Talk about a couple other financial resources I like reading. I wanted to share an article from Forbes. I've got a couple other platforms that maybe we get into. Wall Street Journal, Bloomberg, and maybe Whale Wisdom. As you may know, earlier today, the Fed lowered interest rates. So that's the first article I wanted to share. This article is from Forbes earlier today. I want to take a look at Forbes headlines before we get into that article, though. All right, Forbes, you may know, one of my favorite financial business platforms, so I usually check. Let's see what they have as headlines here. If you can see in the upper left, I want to talk about Lyft as well. Forbes says Lyft shares boom 14% as rideshare firm announces a Waymo partnership. Actually, let's get into that one first. Let's see if this will pull up. Let me see if I can read this article. Maybe not. But actually, I wanted to talk about Lyft. Let me go back. Maybe I'll pull up another platform and talk about Lyft later. What else does Forbes have? This is the main article right here today in the upper right. Fed lowers interest rates and signals more rate cuts this year. I've actually got that article ready to go, so let me share that screen. Let me remove that one and let me share. Let me stop sharing that one and let me share the article, this one right here. Okay, so probably the biggest story out of the market today was the Fed rate reduction. This article says Fed lowers interest rate and signals more cuts this year. Okay, so this is the part that caught my attention. We kind of expected the Fed to do their thing today. We didn't know, at least me, I didn't really expect this part here. More cuts later this year. So let's get into this article right quick. The Federal Reserve on Wednesday voted to lower interest rates following months of pressure and criticism from President Donald Trump as the central bank signal additional rate cuts later this year. All right. What I'm going to do shortly is actually look up the dates for the remaining FOMC meetings later this year. I believe they have one in November and one in December. Key facts. The Federal Open Market Committee voted 11-1 in favor of lowering interest rates by a quarter point between 4 and 4.25, down from 4.25 to 4.5, a range where they have been held since December. Fed Governor Stephen Miron, whom Trump appointed to the role to fill Adriana Kugler's vacant seat, argued for a half-point reduction to rates as the lone dissenting vote. Let's see who else. These two people who had. Actually, let me skip down here. The FOMC said two. Here's a key takeaway for me personally. The FOMC said 2 additional rate cuts are expected by end of year, as concerns are raised over the weakening labor market. Okay, investors are favoring 2 more quarter-point cuts in October and December. Okay, October and December, potentially lowering the funds rate to between 3.5 and 3.25 by end of year, according to FedWatch. Let's see. What else do we have here? Let's scroll down and get into the actual article here. Let's see if. Okay, actually, that's pretty much it. That's pretty much it right there. Let's see here. What the Fed has said about lowering interest rates. The Fed has planned for up to 2 25 basis point interest rate cuts by end of year. The Fed's July meeting indicating almost all policymakers thought it was appropriate to keep rates between the current range. As Powell indicated, the Fed will continue monitoring incoming data on jobs and inflation. The Fed adheres to a dual mandate of full employment and stabilized prices. Inflation has remained above the central bank's goal of 2%, worsening as expected to 2.9 in August, while unemployment ticked up to 4.3, with far fewer jobs added than projected. Okay. Fed Governor Lisa Cook remained on the central bank's policymaking panel this week after an appeals court dismissed Trump's bid to sack her. Trump previously called for Cook's resignation after Federal Housing Finance Agency director accused her of mortgage fraud after she allegedly designated 2 properties as her primary residence. Cook has denied the claims, telling Forbes in a statement that she has no intention of being bullied to step down from my position because of some questions raised in the tweet. The White House has stated it will appeal the ruling. Okay, so this is the key headline in today's market: the reduction of interest rates. Okay, widely expected. What I wanted to do now is actually look up the exact dates in October and December where the Fed will meet again and potentially lower rates further. So let's do that right now. Let me stop sharing that one. Add myself back to the stage. And let me pull up. I'm going to ask the AI what dates the FOMC meets later this year. Let's check that out. Let me share my AI screen. What I'm going to do is actually let me go to home. Let me go to Grok AI. I actually have it pulled up already here. Hopefully you can see that. Let me make that a little bit bigger. I had asked the AI what dates later this year the Fed meets again. So let's see here. The Federal Reserve, Federal Open Market Committee, FOMC, meeting where interest rate decisions are made is scheduled for today. Yesterday and today. The official policy. All right, let me actually highlight what I wanted to highlight. Okay, no, this was actually something similar. I had asked the AI earlier, when is the Fed rate decision? I think I did this on my phone. So what I'm going to do is ask the AI on my laptop, when does the FOMC meet again later this year? So what I wanted, the objective here is to circle these days on my calendar. The federal FOMC has one remaining meeting scheduled for 2025 after September 17th, and that'll be on December 9th and 10th. Let me make that a little bit bigger. I thought they had multiple meetings remaining this year. This one says December 9th and 10th. So you might want to circle that day on your calendar, maybe on your phone's calendar. The Fed will meet again on December 9th and 10th. Let me ask the AI something a little bit more specific. List all the FOMC meeting dates for 2025. Let's see what it says. Okay, so yeah, we did miss one, the November meeting right there in the bottom. Let me make that a little bit bigger. Okay, so today's meeting was right here. So you may want to circle these days on your calendar, November 4th and 5th, and December 9th and 10th. Okay, so if Forbes is right, if their prediction is right, we'll have two more rate cuts, one on probably November 5th and the second on December 10th. So you may want to, so I'm going to put those dates on my calendar, circle those key dates on my calendar, November 5th and December 10th. Okay, so we may have two more rate cuts on the 5th of November and the 10th of December. Policy statements and rate decisions are typically released at 2 p.m. Eastern. Okay, if you want to get specific with the time, 2 p.m. Eastern on those dates. On the second day of each, okay, so if you see there at the bottom, on the second day of each meeting, followed by a press conference with Chair Jerome Powell at 2:30 p.m. Eastern. Okay, so key dates right here: today, November 5th, and December 10th. Okay, key dates, the remainder of this year in terms of interest rates, potential interest rate reductions. Okay. All right, so I got a YouTube short that I want to share. Let me remove that one and let me add the short I wanted to share. Share screen, YouTube finance. Let's talk about these couple shorts posted earlier today. Talk about this first one. Hopefully you guys can see that. Hopefully the audio will come through perfect.
In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. While the unemployment rate remains low, We also decided to continue to reduce our securities holdings. While the unemployment rate remains low, it has.
I got one more short I wanted to share. It's also Powell speaking. This one here.
You see people who are sort of more at the margins. So kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one. You see.
All right, that was Powell speaking earlier today. That was a YouTube short, a couple YouTube shorts I wanted to share. All right, so let's see what else we have. A couple other things I wanted to discuss today. Let's see here. You might have noticed gold. I have gold here in my notes. I want to discuss gold. I saw a headline from earlier today. Let's see if I can pull up an article here and let's talk about gold. I think gold hit an all-time high today. Let's see here. Let me share gold. Let me share my screen here. Let me search. Let me share gold here. All right. Hopefully you can see my Google screen. All right. I literally just searched gold price. All right. Let's take a look at gold. Currently at 3702. This ticker is. Actually, this is gold futures here. Let's see if we can search some of these articles. Let me make that a little bit bigger here. All right, hopefully you can see that. This one article says here, Deutsche Bank raises gold price forecast to 4,000 an ounce. This is from 5 hours ago. Why the price of gold could hit 4,000 this September. Okay, it's September 17th today. This article is from CBS News. Let's take a look at that one. This is from about 1 p.m. Eastern today. The price of gold has risen significantly this year, following a remarkable surge from just the start of 2024. At that point, the price of gold per ounce was $2,063. But as of Wednesday, the cost for the same amount of gold was a staggering $36.78. That's up almost 80% in 18 months, approximately. Okay, 18 months, gold has been up about 80%. And the price surge may not even be over. After moving past 36 per ounce earlier this month, the latest in a series of record-breaking movements, there's a strong possibility that the price could soon break 4,000. While this could be good for investors who already have a portion of gold in their portfolio, it should be motivation for beginners and others who have yet to get started to take action now before they're priced out of the market entirely. Okay, that's a key sentence right there. Let's pause for the cause on this sentence right here. Let's pause for the cause. Let's meditate on this sentence right here. While this could be good, I can't even read. While this could be good for investors who already have a portion of gold in their portfolio, it should be motivation for beginners and others who have yet to get started to take action now before they're priced out of the market entirely. Okay, what market does that sentence remind you of? Now, this article's on gold. What asset class does that last sentence remind you of? Drop it in the chat. It should be motivation for beginners and others who have yet to get started to take action now before they're priced out of the market entirely. What other asset class can that sentence apply to? to get started to take action before they're priced out of the market entirely. That for me, I see crypto. I see somebody mention crypto. What else? Is there any other asset class where we should take action now instead of us waiting and then getting priced out completely later on? Should we be proactive or should we be reactive? What asset class does that remind you of? Take action now before you're priced out completely. I see, what else? I see crypto. I see blue chip stocks. I see Bitcoin. I see tech. Okay. All right. The actual asset class I was thinking of as soon as I read this sentence here was the real estate market. Okay, was the real estate market. Real estate tends to go up over time. If you think real estate is expensive today, September 17th, 2025, what do you think the price of real estate will be on September 17th, 2030? Okay, so that crossed my mind as I read this sentence. This is a reminder to myself first. Before I remind anyone else. Take action now. Okay, take action today instead of complaining tomorrow, right? Take action now in the real estate market. Take action now in the equities market. Take action now in the derivatives market. Take action now in the crypto market. Take action now in whatever market, maybe even the futures market. Okay, so as I read this, I thought real estate. The first asset class that popped in my head was real estate. All right, let's continue. To better understand the motivation for acting promptly, then it helps to understand the current dynamics that could push the price of gold past 4,000 per ounce, perhaps as soon as this September. Below, we'll examine 3 influencing factors investors should evaluate now. Let's see what they say. There are 3 primary reasons why gold price could continue the surge this month, potentially even past 4,000. The first reason is they mentioned interest rate cuts. Okay, first reason. When interest rate cuts are issued, they often cause the price of gold to increase. This tends to make a gold a more attractive investment option than those with diminished returns, causing investors to flock to precious metal, causing the price to rise with it. This cause and effect isn't always a sure thing, as gold has risen in price in recent years alongside both interest rate cuts and hikes. But if the Federal Reserve issues another rate cut this month, as widely expected, gold prices could respond by rising a bit closer to 4,000 per ounce. And depending on how the market reacts, soon past another record. Okay, so the first reason they mentioned is interest rate cuts. Second reason they mentioned is inflation. As a rising inflation rate tends to cause the price of gold to rise, and the latest inflation reading for August, released earlier this month, showed inflation headed upward. Now at a rate of 2.9%, inflation is almost a full percentage point above the Federal Reserve's 2% goal. In this climate, when inflation erodes the purchasing power of the dollar. Actually, this is a good reminder to myself. Actually, I saw an article earlier today that mentioned the decrease of the purchasing power of the dollar. So let me maybe we'll pull that article up later. Decreased purchasing power of the dollar. Investors tend to move toward assets that can maintain or even grow in value. That renewed interest often helps gold prices to rise, which could cause it to break through 4,000. Okay, so the second reason they mentioned is inflation. And the third reason they mentioned is uncertainty. Market uncertainty could cause renewed interest in safe haven assets. The economy is hard to predict now. The unemployment and inflation rates are up again, but stock market performance is strong. And rates on mortgages and some other products are declining. Again, against this market uncertainty, the price of gold could rise again as investors move towards safe haven assets, of which gold is one of the more conventional ones. All it will take is movement in one of these areas to cause gold's price to surge once again. So if you know you need the benefits and portfolio protections. Okay, all right. So here, let's just quickly summarize the bottom line. Conditions are right for the price of gold to not only rise but for it to grow, if you want to hedge against inflation and portfolio diversification that gold can offer, then consider exploring your gold investment options now. Okay, so gold, a good way to diversify your portfolio. This article mentions three reasons that gold could surpass 4,000 per ounce. Okay, so that's another thing I have in my notes I wanted to discuss today: the price of gold. Okay, the price of gold. All right, the price of gold is heading in one direction only, and it is not down. It's down. Okay, it only seems to be up. If you believe in gold, gold seems to be a good store of value, especially in the last 18 months. Okay, what do you guys think about that? What do you guys think about gold? Do you guys own gold? Let's see. Natasha says Kawasaki bought his $4 million home in gold with gold. Oh yeah. Did he liquidate? Did he liquidate gold to buy cash, or did he just purchase with gold directly? I know in Miami in recent years, I'm not sure if this is still the case. I suspect this is still the case, but just after the pandemic, I know certain markets, specifically Miami, they were accepting Bitcoin as payment for real estate. I'm not sure if that's still the case, or other markets followed suit, or if that's still the case, or what. Let's see what else we have here. Okay. Yep. Okay, so Andrea says, have 7 shares of GLTR for a decade, gold, silver, platinum, and palladium. Okay, good for you. Silver. Okay, so I see someone is talking about silver, GLD, ticker GLD, or physical gold. Really, that's a personal decision. If I had to choose one, this is just me personally. If I had to choose one, I'd choose the ticker. I'm not trying to carry gold bars around in my house or in my safe. I prefer the ticker. I don't prefer the physical gold itself. I'm trying to keep it light. I'm trying to keep things minimal, so I prefer the ticker GLD instead of physical gold. Howard says he's dollar cost averaging his holding. Okay, good for Howard. Okay, so according to Natasha, Kawasaki liquidated his gold position to buy his real estate. Okay. All right. Okay, so that's gold. That's what's going on with gold. All-time high, expected to hit even higher in the near future. All right, that's gold, all-time high. I got a notification, I think it was Monday, regarding one of the mega caps we discussed in the past. Let me see if I can find that article here, and then I'll share my screen. All right, here it is. Let me share the screen here. You might have heard this back on Monday, I believe. Let's talk Google. Okay, there's an article right there from Investors Business Daily in the upper left. Google tops 3 trillion market cap as Gemini takes top spot in Apple Store. Investopedia in the top right. Watch these Alphabet stock price levels after Google parent joins the 3 trillion. Article here from Forbes. Google's nano banana moment, 50% upside for Google stock. Okay, so Google is the newest member of the $3 trillion club. You know what I'm going to do? I'm actually going to pull up FinViz, another resource I like checking from time to time. Let me pull that up right now. Let's see if I can pull this up correctly, and then I'll share my screen. You might have seen me talk about FinViz before. Yeah, here it is. Okay, let me share my screen here. Let me share my FinViz screen. I'm a visual guy. For all other visual people, let's take a look at finviz.com. All right, so this is the S&P. One thing I like about this S&P map is it shows companies by market cap and relative size. Okay, the market cap by size and those companies in relation to other companies. Okay, so Google right there in the middle, right in the center, is the newest member of the $3 trillion club. Okay, Google right there. Microsoft, Nvidia, Apple, Amazon, Google, Meta, Tesla. Okay, some of the heavyweights in the S&P 500. Okay, you can see how big these companies are just by this visual. Okay, so Google's on the rise. Okay, Google's been on fire the last month or so, currently at 249.85. You can see how big Google is in relation to other companies. Okay, Google is bigger than Meta. Google is bigger than Tesla, Walmart, Costco, Coca-Cola, Eli Lilly, JP Morgan, Visa, Berkshire, Johnson & Johnson, ExxonMobil, Home Depot, Oracle. Okay, Oracle's been on fire recently. Look at the size of Oracle. Look at the size of Google. Look at the size of Google's right there. Oracle's right there. Okay, look at the size in relation. Okay, Google and Palantir. Look at this. Compare those sizes. Google and Palantir. Compare the size of Google and Salesforce CRM. Compare the size of Google and Uber. So Google and AMD. Okay, Google and AbbVie. Google and okay, you can see how big Google is compared to some of these other companies. IBM. Okay, it smokes IBM. Okay. Okay, so Google is the newest member of the $3 trillion club. All right, well, let me go back to some of those articles. Let me go back to some of these articles. Let's talk about Google. Okay, actually, let me look up the ticker first. Let me see. Let's take a look at Google's stock price and see what's going on with Google. Okay, so currently at 249.85. That's the 1 day, 5 day. Okay, up 4% in 5 days. Okay, up $9, almost $10 in 5 days. Let's check the month. Let's check the month on Google. Google has been on fire. 22% in 30 days. Okay, last month up $45 or 22%. Okay, Google's a monster. 6 months, 50%. Okay, 50% in 6 months. What legal and ethical investment has been up 50% in 6 months? Okay. What legal and ethical investment has been up 50% in the last 6 months? Year to date, let's check the year to date. What legal and ethical investment has been up 31% year to date? If Google stayed flat the rest of the year, okay, what legal ethical investment gives you 31% return in 1 year? Okay, so Google is on fire. The 1 year, 55%, 56% in 1 year. Okay, 56% in 1 year. 5 year, 242% in the last 5 years. Okay, so this 5-year chart shows the power of just buying and holding. Buying, being patient, holding. Okay, so this chart, you could see a similar pattern with the S&P, with the NASDAQ and some of the other mega caps. Same story. 242% in the past 5 years, all time, almost 800% return all time. Okay, so again, this chart shows the power of buying, waiting, buying and waiting, buying and holding. Okay, if you buy and hold it long enough, you can get 800% return on your investment. Okay, so Google is a monster. Google's a monster. I personally use Google every day. I use several Google services every day. I use Gmail every day. I use Google Maps every day. I use not Google. I use YouTube every day. I use 3 Google platforms every day. Gmail, Google Maps, and YouTube. Okay, YouTube might be in my top 2. Let me think of YouTube. YouTube might be my top website that I use every day. If not the top website I use every day, it's the top 2. So for me personally, if I had to choose the top 5 websites I use or the top 5 platforms I use every day, Google might have 2 or 3 of those top 5. I'm using Gmail every day, YouTube every day, and Google Maps every day. They might have 3 of the top 5 websites or platforms I use every day. So Google's a monster. Google is a monster. All right, let's check one of these articles right quick. Let me go back. This one right here. Let's check this news tab. All right, let's see what's going on Google. Watch these. Okay, Google sets out to... Yeah, let's check this one right here. From CNBC 2 days ago, Monday. Alphabet becomes 4th company to reach 3 trillion market cap. Okay, the company added billions of dollars in value in September following a favorable antitrust ruling. The milestone comes a little over 20 years after Google's market debut and 10 years after the creation of Alphabet. Okay, so that bullet point right there highlights the power of buy and hold. Google has joined the $3 trillion club. Shares of the search giant jumped more than 4% on Monday, pushing the company into territory occupied by only Nvidia, Microsoft, and Apple. The company ended the day with a market cap of $3.05 trillion. The stock got a big lift in early September from antitrust ruling by a judge whose penalties came in lighter than shareholders feared. The U.S. Department of Justice wanted Google to be forced to divest its Chrome browser, and last year, with a district court ruled that the company held an illegal monopoly in search and related advertising. But Judge Amit Mehta decided against the most severe consequences provoked by the DOJ, which sent shares soaring to a record. After the big rally, President Trump congratulated the company and called it a very good day. Okay, I'm sure Trump has holdings in the S&P and maybe even Alphabet specifically. Alphabet shares are now up more than 30% this year, compared with the 15% gain for the Nasdaq. The $3 trillion milestone comes roughly 20 years after Google's IPO and a little more than 10 after the creation of Alphabet as a holding company. CEO Sundar was named CEO of Alphabet in 2019, succeeding co-founder Larry Page. Pichai's latest challenge has been the surge of new competition due to its rise in AI, which the company has had to manage through, while also fending off aggressive set of regulators. I can't read, in the U.S. and Europe. Okay, the rise of Perplexity and OpenAI ended up helping Google land the recent favorable antitrust ruling. The company's hopes of becoming a major AI player largely ride with Gemini, Google's flagship suite of AI models. Okay, so Google, 3 trillion market cap as of Monday. Okay, so this article from Investors Business Daily mentions Gemini taking the top spot in the Apple Store. Okay, Google and Apple are in bed. Gemini has taken the top spot in the Apple Store. If you can see this article from yesterday from Forbes, Google stock versus Amazon, Microsoft, and Meta. Let's take a look at this one. Okay, mega caps competing directly. Okay, you might have heard me mention this metric in the past. Let me see if I can get rid of this ad right here. Okay, so you might have heard me mention margin. Google's operating margin, 33%, is strong, higher than most peers, but lower than Microsoft's 45%. Okay. Me personally, I don't get it involved. I don't let the emotions, I don't let the feelings, I don't let the opinions dictate my investment strategy. This is probably the leading metric. This is probably the leading determining factor of how I invest. Profit margin. Okay. There's no feelings for me. There's no emotions for me. There's no opinions for me. The leading determinant of how I invest is profit margin. All right, let's see what else we have here. Google gained 60% in the past year and trades. Okay. As background, Alphabet offers a wide range of products and services, including advertising, Android, Chrome hardware, cloud services, cloud solutions, health, tech, and internet services across several segments. Okay. So this little graphic right here compares Google, Microsoft, Apple, Amazon, Meta, and Z. What company is Z? I forget what company Z is. Why does this matter? Google has jumped 24% in a month. Okay. 24% in a month. All right. While your coworkers, while your friends were complaining about Donald Trump, while they were complaining about the economy, while they were complaining about racism, your investment jumped 24% in a month. Okay. Comparing it with peers helps place its performance, valuation, and financials in perspective, showing whether it's truly outperforming or falling behind. And most importantly, if this trend can continue. All right. So here's an article on Forbes. You guys can check out the rest of it. Operating margin comparison. Here we go. Operating margin comparison. All right. This little chart summarizes margin comparison of the mega caps. Okay. What else? We got PE ratio comparison. All right. That's about it. Okay. For me personally, it's about profit margin. Okay. There's no feelings. Profit margin. Okay. One of the leading metrics in business, if not the key, the most key metric in business, in my opinion, is margin. Okay. What are your margins? What are your profit margins? If you're a business owner, know your profit margins. You must know your numbers, including profit margin. Okay. All right. That's all right. Let me get my tech straight. Hopefully, okay. There we go. I'm screwing up the tech. You know, I stay screwing up the tech. I apologize for that. All right. So that was Google. Google is making moves. Okay. Google is adapting. One thing Google is doing is keeping an eye on competition, right? Google is competing with some of these other mega caps directly on AI, some of their other services. Google keeps an eye on what Amazon's doing, what Apple's doing, what Meta's doing, and so forth, what Oracle's doing. Okay, so that we can take a lesson in that. We can take a lesson in that. All right, let's see what we have here. All right. One company I mentioned last week that just went public recently, I wanted to talk about them briefly here, was StubHub. Okay, was StubHub. Let me pull up Google right here and share that screen. All right, here we go. Now, not Google. StubHub just recently went public. Here's some headlines. Okay, here's a headline from Investopedia. StubHub stock opens above IPO price in first trading session. That was from 13 hours ago, and then 8 hours ago earlier today. StubHub slides 6% in New York Stock Exchange debut after ticket sellers' long-awaited IPO. I personally have used StubHub in the past. I'll keep an eye on StubHub. Let's see. Let's check out this CNBC article. All right, StubHub slides 6%. StubHub opened at 23.35 in its NYSE debut today, but then dropped after our online ticket site priced its IPO in the middle of expected range. The IPO is the latest in a flurry of recent tech debuts following an extended lull in U.S. IPOs. StubHub delayed its IPO in April when Trump's Liberation Day tariffs jolted markets. Okay, let's see what else. What is StubHub currently at? StubHub shares dropped 6% in their NYSE debut on Wednesday after the online ticket seller priced its IPO offering in the middle of its expected range. The price late Tuesday at 23.5 per share raised $800 million for the company, now trading under the ticker symbol STUB, S-T-U-B. The stock opened at 23.35 and closed at 22, valuing StubHub at 8.1 billion. Okay. How do you come up with valuation? What's the formula for valuation? Someone dropped the formula for valuation in the chat. What's the formula for valuation? How do you value a company? What's the formula? What's the formula for a company's valuation? Someone dropped that in the chat. The stock opened at 23.35 and closed at 22, valuing StubHub at 8.1 billion. How do they come up with 8.1 billion? Anyone know? It's just two numbers multiplied by each other. Number of outstanding shares times its price. Okay, so you can actually reverse engineer the number of outstanding shares. If the value is 8.1, divide that by 22, and that will give you the number of outstanding shares. Okay, so number of outstanding shares times price will give you this 8.1 billion. All right, let's see what else. StubHub's long-awaited IPO comes after the company paused its plans in April. It was a second such delay after market volatility forced StubHub to temporarily shelve its IPO plans in July 2024. The IPO is the latest in a flurry of tech offerings as the market rebounds from a dismal few years. Swedish buy now, pay later Klarna and Gemini, the crypto firm founded by these people, rose in their respective debuts last week. Okay, so they're talking about other recent IPOs. Circle, I believe, also went public recently. StubHub has been through numerous transactions in its 25-year history to get to this point. It was purchased by eBay, but then reacquired by its co-founder Eric Baker in 2020 for roughly $4 billion. Okay, so look, 5 years ago, the founder bought it for $4 billion. Now it's worth double that at $8 billion. Okay. StubHub has benefited from a resurgence in the live events market in years following COVID. And they go on to mention Taylor Swift's Beyonce tours. Okay, so StubHub is essentially a marketplace, right? Connecting buyers with resellers. All right, so that's StubHub. We talked about StubHub last week going public. StubHub is now currently worth $8 billion. $8 billion. Okay, what do you guys think about that? I'm sure you guys used StubHub in the past. That's the recent news with StubHub. Okay, StubHub is worth $8 billion. What do you guys think about that? All right. Yeah, here we go. Here's a formula for valuation. Share price times number of outstanding shares will give you the valuation of a company. So we just talked about Google a few minutes ago. If Google is worth $3 trillion, I believe in their financials, somewhere on their financials, they list the number of outstanding shares. You can look up their share price, just multiply those two numbers, and that will give you their valuation. Yep, here we go. Yeah, here it is. Number of outstanding shares times price is the valuation. All right. Okay, so that's Google. That's StubHub. Let me check my notes here. There's a couple other interesting things I saw online the last few days. And one of them, let me see if I can find one of them. I think it was on, let me pull up. I think it was CNN. It was either CNN Business or Yahoo Finance. Let me see. Let me share my Yahoo Finance screen. Okay, so even Yahoo Finance mentions potential additional rate cuts there, right up there on the left. Fed signals 2 more rate cuts in 25. We talked about the potential days that the Fed does that. So you might want to circle that on your calendar. Let's see what else we have here. The article may be, actually, this is one of them here. This is one of the articles I want to talk about here, or one of the companies I want to talk about, and that's Lyft. That's Lyft. I recently put Lyft on my watch list. I believe Lyft has been on fire recently. See if I can pause this video. All right, let's see what this article says. Lyft stock surged 13% Wednesday after the company announced a partnership with Alphabet's Google self-driving Waymo service to roll out an autonomous ride-sharing service in Nashville next year. That makes me think about a competitor to Waymo. Is that I was just on the West Coast and I had seen several of these. It wasn't Waymo. It wasn't Tesla. It was either Zoox or was it start with a Z? But I forget the name of the company. But it's a 4-letter name. It's a 4-letter. I think it starts with Z or X. And they're a direct competitor to Waymo and direct competitor Tesla's what Tesla's doing in Texas. So it's interesting to see how these companies adapt to what each other are doing. Riders can initially hail driverless cars through the Waymo app, with plans to integrate the fleet into Lyft's platform later in 2026. The collaboration is significant given that Waymo has deals in place with Lyft's rival Uber for its robotaxis in Atlanta and Austin. Uber shares were down 5% following the announcement on Wednesday. Okay, Lyft currently at 22.84, up 13%. Okay, I'm going to keep an eye on Lyft. The robo-taxi race has accelerated this year. Tesla began testing its service in Austin this summer, with plans to eventually expand to Nevada. Actually, yeah, I did see. Okay, so that's interesting. That's interesting right there. Tesla began testing its service in Austin this summer, with plans to eventually expand to Nevada. Okay, I was just in Nevada. So Tesla looks like Tesla's going to compete with that one company directly right there in Nevada. Arizona, and okay, this is the company right here, Zoox. I saw several Zoox recently in Nevada. So Tesla is planning on competing with them directly. Zoox, backed by Amazon, has also limited testing in San Francisco and Las Vegas. Okay, I just saw a whole bunch of Zoox in Vegas. Waymo has been leading the race, providing paid robo-taxi rides to customers in San Francisco, Phoenix, LA, and Austin. So it's interesting to see how these companies choose to compete directly in certain markets and choose not to compete directly in other markets. So that's very interesting. Okay, so that's actually a lesson to us, right? That's actually a lesson to business owners or aspiring business owners. Sometimes you want to compete with your competitors directly head on. Sometimes you don't want to compete with your competitors directly head on. Okay, so maybe if your competitor is so far ahead of you, maybe you don't compete with them directly. But if you're neck and neck, maybe you do compete with them head on directly. Okay, as an executive, you have to make all these types of decisions. Okay, no different than Tesla executives, no different than Google executives, no different than Amazon executives. Okay, these executives ask themselves these types of questions all the time. Okay, what do we do? What's our course of action? Do we compete directly? Do we don't compete directly? Do we compete indirectly? Do we compete directly in certain markets? Do we compete indirectly in other markets? So these are all types of questions these executives think about. Waymo's co-CEO said in a press release that the deal was part of a gradual rollout as the company continues to scale Waymo's ride-hailing service to more people and more places. At stake is a huge opportunity for companies like Waymo, Tesla, and others. Goldman estimates the market for traditional ride-hailing in the U.S. is worth approximately $58 billion currently. and could be worth more than 330 billion 5 years from now. Okay, so this market is currently worth 58 billion. 5 years from now, they say it's going to be worth at least about 6 times as much. So actually, that's another business lesson right there. That's another business lesson right there. Okay, what's the business lesson just on that sentence right there? What's the business lesson on that one sentence right there? Is there even a business lesson in that sentence? My takeaway from that one sentence is if you see a segment, if you see a line of business that's expected to grow by that much, 600% in 5 years, maybe you do want a piece of that. Maybe you do want some market share in that of that 330 billion. If you can forecast out 5 years and you see a certain segment of the economy that's expected to grow by that much in that little time, I need some market share. I need my fair share. My company needs my fair share. Okay, I'm sure Waymo's saying the same thing. Tesla's saying the same thing. Zoox is saying the same thing. I need my share. If my market share currently is 5%, I need 15%. I need 20%. I need 30%. I need 60% market share by 2030. Okay. So the takeaway for me personally is to have foresight. Okay, we talked about that before. Have foresight. We just don't blow in the wind and hope things work out. We move with strategy. We move with foresight. For Lyft, the Waymo partnership could help the company better compete with Uber and Tesla as it sidesteps building the autonomous technology in-house, a costly and risky prospect. Okay, what's the business lesson in this paragraph? What's the business lesson in this paragraph? Is there even a business lesson in this paragraph? Is there a business lesson in this paragraph? For Lyft, the Waymo partnership could help the company better compete with Uber and Tesla as it sidesteps building the autonomous technology in-house, a costly and risky prospect, particularly if AV expansion stalls. Is there a business lesson in that paragraph? My takeaway from that paragraph is if my core competencies are one thing, maybe I just stick to that. Maybe I partner with a company that has a core competency as something else. They do something good, I do something good. Maybe we partner. Maybe I stick to what works for me, they stick to what works for them, and we partner instead of me trying to replicate what they're doing. That's my takeaway from that sentence, that paragraph. All right. Okay. So that's an article from Yahoo Finance. You guys can read the rest of that on your own. Okay. What else we have? Talked about Lyft today. We talked about Google today. We talked about gold today. What else did we talk about? There's one other thing I have in my notes here I want to mention. Let me see if I can find it here. And then we'll call it a day. This is article, or this is a headline I saw the last couple of days, and I think it was Monday, either yesterday or Monday. Let me see if I can pull up an article here. We'll talk about it. Okay, here it is. All right, let me share my screen here. This deals with the purchasing power. I literally just searched the USD purchasing power. Let's see if we can pull up any of these articles and talk about it. The value of the US dollar explained. If you see this ABC headline right here, the US dollar is off to its worst start in 50 years. Here's why that matters for you. Let's take a look. All right, let's see what this article says. The US dollar is suffering its worst start to the year in more than 5 decades. Okay, let's pause for the cause right there. What's the takeaway from that one sentence? What's the takeaway? Is there a takeaway? Are we going to implement that takeaway, or are we just going to complain tomorrow, next week, next month, next quarter? Are we going to learn? Are we going to take away? Do we have a takeaway from this sentence? Is there a lesson from this sentence, or are we just going to complain tomorrow? Is there a lesson? Drop the lesson in the chat. Okay, likely triggering a price hike for some everyday items and a jump in expenses faced by travelers abroad. All right, let me see if I can zoom this article. Can I zoom this? Okay, maybe not. The greenback has fallen more than 10% in value this year relative to a group of foreign currencies that belong to top U.S. trading partners. Investors have fled U.S. dollars out of fear inflation could devalue the currency, especially as Congress has moved forward with a large spending bill set to worsen a decades-long trend of ballooning U.S. debt. Is there a takeaway from that paragraph? Is there a takeaway? Drop that takeaway in the chat. Will we do anything? Or will we just complain? Here's what to know about weakening USD and what it means for you. Why has USD weakened this year? Value of dollar, like most assets, is set by supply and demand. Okay, let's see what else. What does a weak USD mean for you? You already know what it means for you. All right. Okay, so you can read the rest of that article on your own. Okay, what are some takeaways from that article? What are some takeaways from that article? Are there any takeaways from that article? Let's check the comments. Let's check the comments. Let's check the comments. Any comments? Let's see here. Okay, here's our lesson. Put aside emergency funds for unexpected expenses. Yep, that's a great lesson right there. Something will go wrong. Something will go wrong. Okay, as a business owner, something will go wrong. Okay, it's not a matter of if things go wrong, it's a matter of when things go wrong. Okay, here's a lesson to put aside emergency funds for unexpected expenses. There will always be unexpected expenses. Okay, there won't always be unexpected revenue, but there will always be unexpected expenses. Okay, a great lesson right there. Our dollar is buying less and less over time. Inflation, definitely. What's the plan? The plan is to invest in assets that appreciate in value. Okay, the plan is not to cry about the economy. The plan is not to cry about Donald Trump. The plan is not to cry about HR not liking your resume. The plan is not to cry about the economy. The plan is to invest in assets that appreciate in value. And then someone says time to sell to foreign markets. Okay. All right, so some lessons in the chat for you. All right, 8:34 p.m. Eastern. We usually meet Wednesdays noon Eastern. Sometimes we'll have a meeting at 7:30 p.m. Eastern. It's just a matter of scheduling. It's just a matter of travel scheduling. Until Wednesday, I'll check you guys out again on Wednesday next week, September 24th. We will continue meeting at 12 noon Eastern. Until then, keep doing your thing, keep building your wealth, keep being disciplined, keep being patient, and keep dominating the market. All right, I'll check you out next Wednesday. Peace.